Okay, hi again. So this is a continuation to the video I posted earlier. We already have 11,500 profits. This is in the trade made in the morning. Look, the trade was executed last. I booked the profit at 9:53. It's 11:30 now, so almost 1.5 hour. Markets have moved quite a bit. Let me show you here on the charts. So look, as I told you, in the morning, what happened was markets went on top. We booked profit somewhere around this particular zone when it tested the CPR. From the CPR, it took rejection, came down to the flipping point, and now markets are down. It's tested the lower zone. As I told you earlier, since there's a wick on top as well as down, usually on these days, what happens is market goes on top, comes down, and then goes on top again. But it's not going to go on top immediately. Now the time is 11:30, so it's going to do some time pass here before going on top, and this is where I'm going to execute the trade. So I have my basket ready. Let's just see here. Look, this is a deep in the money call, 25,900 call. It's at 265, 264 at the moment. In fact, before I execute this, I just want to check one more thing. 26 150 call. How much is this running at? This is at 38. Okay, even this is not bad to short actually. This also is not bad, but we'll still take the risk, and we'll go for a deep in the money call short. I'm just waiting for the right zone. I think so this is the right zone. 66, 267, 68. Maybe if I get in near 275, that'll be a better option. Or else one more thing that I can do, reset this path. Now this is a puts will work now. Let's see, 26 100 call. This is at 74, 68. Mostly near intrinsic value. No, 150. Yeah, this is actually better compared to the deep in the money one. Let's do 26 300 call buy as a hedge. This will still take 3 points off. I don't want to give 3 points. Maybe 26 400. I want to keep my hedges as less money as possible, because I take hedges only for margin benefit. I don't really take it to protect my trade. What I'm doing is directional option selling, so these hedges don't really matter. Look, I'm still waiting to take the trade, because if you see the chart here, this is what is happening. Okay, on a 5-minute time frame. Let me go to a 3-minute, you will understand better. So look, 3-minute time frame, what has happened is it has gone on top from 138. Okay, made a slight red candle here, but chances are it will take this out. I'm just waiting for it to at least come near the CPR, and sorry, near the 20 MA. So 26 180 190, that is where I'll be more comfortable executing this trade. Let's see if we get the price. As an option seller, you always want to wait for the best possible price to execute the trade. I think so that's true for an option buyer as well. You don't want to hurry in options, because even a few points, even 3 points, they matter a lot, because quantities are usually big, right? In options, you don't trade with just one lot, and even if you trade with one lot, that's 75 rupees. So why give more? Okay, let's see. There's very less strength in this up move. I think so it's going to get back down here. Let me just check the premiums. 40, 41, 41. What about this one? 273. Okay. Look, as an option seller, I'm trying to capture points. So that's the reason I'm looking at deep in the money premiums, because the premiums are big. So when the movement comes, right, let's say it's going to fall, this one will give me 10 points much faster compared to selling the at the money premium, because there the premium is small. If a 40 rupees premium falls to 35 or 34, that is, or 36, whatever, it's like a 10% fall. 10 to 12% fall. But if a 900 C premium, the deep in the money one, which is at 272, if it falls to even 262, that's smaller, much smaller. Okay, I think so I'm going to execute here. So one, reset, and we're going to go with one more. Oh no, got failed. Okay, let's do one thing. We'll take it here instead. Okay, now I have more of this hedge here, which I didn't really want, but it's okay. So this is our trade. It's running at the moment. Let's see how this works out. The reason I executed the trade on a 3-minute chart, if you see, this is the second wick that is forming, and this particular candle opened lower than the previous one. Again, I'm just doing scalping here. Even if this goes here, I don't mind, as long as it does not break 20 MA. So I'm expecting it will either start falling from here, retest the low, or else it might go on top and then move sideways. Let's go back to a 5-minute time frame. So look, this is what it looks like on a 5-minute chart. Most of the time, whenever I've seen such a formation, like a green candle and a doji with a red body, and the follow-up candle is more or less trying to form red, that time most cases what happens is it goes down back again and covers this entire green candle. So let's see what happens, and I'll update you guys. Now it's just a game of waiting. In fact, if I get a good premium, I might even do some put option buying. The reason I don't do buying a lot is because of the same decay issue. So most of the time when I do buying, my stop loss tends to get hit, and then the premium goes in the right direction, and I don't like to hold when I buy, because if it doesn't work in your direction, or if it goes sideways, then you end up losing a lot of points. So look, this 43 premium, I'm expecting it to decay to at least 2025, and the 25,900 call, I'm expecting at least 255, maybe retest near its day low, 246, 255. Let's see what happens. My quantity, if you see, it's not too big. 325, that is what, 650 total. So compared to what I usually trade with, it is a lower quantity, and the reason is today's Nifty expiry. So firstly, margin benefit that I'm getting is not a lot, and the second reason is that it's better to trade with slightly less quantities on expiry day, because if there's a violent move against you, your losses will be smaller compared to if you trade with full quantities. So look, those who are new to option selling, let me give you a learning here. So 26,150 call, the intrinsic value of this call should be around, let's see, Nifty is at 26,178 right now. So 26,178 minus 26,150, what do you get? Calculator. Okay, 26,178. That's what Nifty is at right now, minus the put option that you have sold, the call option, sorry, 26,150. This is the value, okay, 28. This should be the value of that particular call. How much have I sold at? I have sold it close to 40, 41. Let's consider 41. So 13 rupees is time value in this option. All right, and expiry is just 4 hours away. Not a lot of time value because of low India VIX, but low India VIX movement you can't expect a lot. So if you get like even a half decent setup, you can just take the trade and manage your losses. That's the only way to trade intraday in a low India VIX environment, because you're not going to get the perfect price. It's going to be very difficult. So look, even if you see this chart here, markets moved against me. Okay, what I expected was this would be a red candle. It didn't. It formed a green candle. markets are still moving against me. But if you see my losses, they are still smaller, and I have a lot of time still. So there's no reason to panic, no reason to be worried. For people who are expecting a reversal here, like a complete reversal to the top, chances are less because look, markets tried to go on top in the morning. Then it took a rejection. It means there are sellers active here. Okay, and then sellers continuously are dominating. Look, there have been attempts to push the market on top here also, to push the market on top, especially this zone 26 195, 26 198. This was a very important zone, and buyers did try to make an attempt here. If you see, there were two green candles, 5-minute time frame. So two green candles, this even looked like it's okay, it's going to break and move again towards the CPR, but it didn't. Sellers dominated, and this is strong selling. So sellers won't give up control so easily right now. That's what I think. So simply buying a call or expecting reversal just because market has come down won't be a very wise decision. It's better to just, so this is the status of the position. All right, it moved heavily against me, but I was still holding the position. Let me show you what happened. So this is the chart. All right, if you remember, we took the trade. I made the trade in this candle. Okay, it did go on top. It tested 20 MA as I told you. It should, and then from 20 MA it took a rejection and started going down. So at this particular candle, this red candle, when I saw it forming, taking a rejection at 20 MA, I did an adjustment trade. What I did was I purchased 26,400 puts, deep in the money puts for Nifty. I purchased it at 215 and I sold it at 223. Some got sold at 222. So just 8 points here, but my quantity, look at my quantity, it was 1300. Reason is I took bigger quantity, but my stop loss was small. If you see, I had placed a system stop loss where my stop loss was at 200. So I was taking a 10 points risk because I had a high conviction that it will spike up. So when I saw a small reward, 8 points, I just took it. Again, I'm telling you, I don't follow the textbook method of 1:1, 1:2 strategy. I follow what I see on the charts. Sometimes markets give you a lot, sometimes you have to just accept smaller gains and get out of the market. So that's what I did here. The reason I removed this trade early was firstly because it was a buying trade, secondly it was an adjustment for my calls. So as soon as it covered up the negative that I was seeing in my running call short trade, I directly exited the position because that position was for to balance out the loss. It was not with a view to make a profit. That was not my original trade. This what is running is my original trade. And even here, look, now what has happened is this particular premium, if you see, I had shorted it somewhere around here. Okay, and from here it went heavily against me. It went almost 20 odd points against me, and now it's coming down. So it's already done a journey of a 20-point decay. So from here I cannot expect another 20 points down. I can, but probabilities are less. So I might square off my position somewhere around here in a small gain, and I might call it a day for today. Nifty expiry, I have already made like profits running is about 25,000, which is not bad, and I might close my position at any time now. I'm just waiting for the perfect time based on what I see on the charts. Nifty is still looking a little bit weak. Let's see if I get to see the 30,000 round number. That will be a good zone to exit, but chances are less. Let's have a look, guys. Okay, it doesn't seem like it's going to touch that 30,000 mark, and I don't really want to take the risk here, so I'm exiting my positions. There you go, guys. 26,981 done on Nifty expiry. Let me show you the charts, the reason why I exited. I'll go to a 3-minute time frame. So look, this is what was happening. It was running a running red candle, okay, but I saw a wick forming from down. As soon as I saw a wick forming, I don't want to take a risk. I'll secure my gains, and I can always wait for another trade. Even if this continues to go down from here, no regrets, because I did the trade as per my view, and I was able to book some sort of profits in this particular trade, even though it was not a perfect execution because it did move against me. better execution would have been here near 20 MA, but I honestly didn't expect the price to go all the way up to 20 MA. I thought markets were weak looking at the selling, so I thought continuation will come from here. But that's the market, you can't always predict and always be right. So that's it for today's day, guys. I'm going to close the day today, and I'll see you tomorrow. So this video is a continuation to the video that I posted earlier. So if you have not seen the video posted earlier, that was for my first trades. You can go ahead and see that as well. I hope this is helping you guys, because this is mainly more of option selling. And a lot of traders who are posting videos right now, they don't show this part of option selling. They usually post trading strategies, and they very rarely you see a trader actually posting live trading videos. So this is a live recording of the trades that I'm actually taking. So I hope this is helpful to you guys, and yeah, I'll see you again in the next one. Bye bye.